Hello and welcome back to Kitco Mining with me, Paul Harris. Today we've got an M&A transaction to talk about. Revival Gold has caught the M&A bug and announced the transaction to buy Ensign Minerals in a 21.9 million Canadian all-stock deal that will accelerate its path towards gold oxide production in the Western USA. Joining me today is President and CEO Hugh Agro. Hugh, welcome back to Kitco.
Great to be with you, Paul. Thank you.
Now, Hugh, I gave the broad outlines of the transaction. What will this transaction do for the company in terms of scale, development project, prospects, etc.?
Well, first and foremost, it's accretive on that all-important heap leach resource per ounce. So we're increasing our heap leach resources per ounce by over 60%, and we're doing that for only 1/3 of our market cap pro forma. Secondly, it's taking us to a bigger scale, 150,000 ounces per year of heap leach gold production targeted from these projects in the Western United States, all synergistic to the same operating area. And then finally, broadly speaking, we're going to move to production much quicker than we would on a standalone basis with the Bear Track Garnet project in Idaho, now having this Mercur project in Utah moving quicker and taking us to production. So this is a win-win-win across the board, and for the Ensign shareholders who are joining us at Revival Gold.
I want to dig into some of the details of the transaction in a moment, Hugh, but first off, I want to ask you, why now? Why is now the time to do a transaction like this?
Well, we see this massive disconnect between where the price of gold has gone, the growing gap between the pace of production in gold and the pace of discovery. I mean, that creates a huge opportunity for developers. But as I was saying on the outset there's also been this big valuation gap between where the price of gold has come from and where it's going and where the stocks are trading. So this is a time to be buying. This is not a time to be selling. We want to consolidate where we can, build scale, build a better business for the future cupboards that are bare in the senior and mid-cap gold producer cupboards. So, this is positioning for the future.
Okay, buy low is one of the ways to make money, and it seems you're certainly doing that with this transaction. Now, the project you're getting is Mercur, which is in Utah. It's a gold oxide project. It's amenable to open pit heap leaching. It's had production in the past, and it's on private land. Why are all these things important, and how do they mean that or enable Revival to get into a production scenario quicker than with the Bear Track Garnet project in Idaho?
Yes, well, so as you point out, the advantage is that we can move more quickly to production. And the reason why is that, first of all, we're on private ground, which allows us to go through a state process of permitting with DOGMA, that's in Utah, the Utah State Agency, as opposed to going through a federal process, which one has to do on BLM or Forest Service administered lands in the United States. So that's one advantage. Second advantage is that because we're in an arid location at Mercur, we don't have to worry about water. Groundwater, surface water is nil to absent. And so that makes for a much easier path of permitting. We don't have to do extensive baseline data collection for water. We don't have to deal with how to treat water or how to collect water on the site. And that makes things a lot faster.
Okay, and how will this fit in terms of your Bear Track Garnet project, the schedule, things of that nature?
One of the real attractions of this project, not only does it accelerate our path to free cash flow from heap leach gold production, but it does so in a sequenced manner. So while we were advancing the Bear Track Garnet permitting aspects, we will move to the engineering side on Mercur, taking that 1.6 million ounce oxide resource into a PEA. There's a bunch of steps as we do that. One of them is geological modeling. Again, this is something our team's really good at doing, collecting the old data that's on paper format, digitizing it, getting it into a model, looking for opportunities, low-hanging fruit, as I like to call it, to improve on the economics, build on the project risks, lower the risks. So we'll do that. We'll do metallurgical test work, column tests, all that to dovetail into this PEA. So Our team will be focused on that while the permitting is advanced. And of course, we'll be doing exploration, qualifying targets for future drilling on both projects. And that's something we do very well at Revival Gold as well.
Now, you said in the news release that the aim is to complete a preliminary economic assessment first quarter next year. Your team in Idaho recently completed a PFS on Bear Track Arnett. So is there a lot of that sort of process, that knowledge that you can bring to the PEA, given that, again, it's also a heap leach gold oxide project, Western US? I imagine there's a lot of similarities between the two that will help propel the PEA along.
If we step back to the Revival Gold strategy, we've focused on these brownfield locations where we've got advantages in terms of infrastructure, data, extensive data to work with. And so our team has been through that exercise with Bear Track Arnett. We're now going to do that at Mercur. So that is absolutely synergistic in terms of our skill set and our capabilities. But also, and importantly, these projects are a 6-hour drive from one another. And as you point out, very similar types of projects. The Bear Track Arnett first phase heap leach, 12,000 tons a day, is scaled about half the size of what we would imagine to do at Mercur, but it's all the same sorts of steps and processes involved. And so that's a synergy, this close proximity of the projects in the same jurisdiction, same kind of environment. And absolutely, that's synergistic for our team and just in terms of our operating expertise.
Now, given that you see the potential for production sooner at Mercur than Bear Track Arnett, will that mean that Mercur is where you focus your spending now going forward? Will that get the dollars, or will you still continue to spend at Bear Track Arnett?
You know, the balance is about 50-50. The process to take us forward to a PEA on the heap leach at Mercur by the end of first quarter of 2025 will be about half the funds deployed. The other half of the operating funds deployed will be at the Bear Track. We want to continue to progress that permitting and look for the extensions and qualify the extensions to that 5.5 kilometer trend of mineralization that we've hit with every drill hole. We've got another 5 kilometers of structure. We want to get out now that the season's opened and map, qualify the targets for future drilling. And that's a value creation exercise in and of itself. So about a balanced spend. But what's really nice about this is things sequence. So our team will move from the engineering at Bear Track Arnett to the engineering at Mercur, and the geological modeling data compilation at Mercur is again complementary to what we've already done at Bear Track.
Okay. A lot of market observers for a number of years now have been calling for the need for more consolidation in the gold sector, particularly amongst the sort of juniors, the smaller end of the spectrum. You announced this deal yesterday. I imagine you had a lot of calls yesterday. What was the reaction? What was the response to this transaction?
I would say it's been fantastic. We're really building ourselves into a different scale of business with this transaction. We're going to be the third largest portfolio of gold resources, and I would note pure gold resources in the Western United States behind AngloGold and Perpetua. And we're doing so at a market cap of about $7 an ounce in the ground. So lots of upside beyond here, and the catalysts in place that we've already talked about to deliver value for shareholders. So the response to that has been fantastic. The other thing is, I think there's a really good fit here. Ensign, private company, has gone through a lot of the same steps that we did at Bear Track Arnett. So there's a lot of common themes here: brownfields focus, the aspect of existing infrastructure, the proximal location. So there's a really good fit between these assets and with our team, importantly, and the ability to execute on it in a staged fashion. So it really ticks the boxes in terms of our strategy at Revival Gold. It ticks the boxes in terms of our emphasis on quality ounces and move to free cash flow. And we're doing it with a private company, so we don't have all of the costs that are involved with the usual kinds of transactions that your viewers will see. We're going to have one team. We're not going to add a lot of money to our G&A here at all through this transaction, and the transaction costs themselves are relatively modest. This is a win-win-win across the board.
Well, your timing seems to be very good, Hugh. Gold's at $2,300 an ounce. The financing window seems to have opened again for gold exploration and development companies. With this this transaction, you're planning a rather modest raise of 7 million Canadian. Given some of the money that's becoming available to the sector now, that does seem to be quite a modest raise. Why have you picked that sort of figure as your target for the raise, and what will that enable you to do?
It's about 10% of the pro forma company's market capitalization. So you're right, it is relatively modest. But investors are still very careful about where they deploy capital, and we don't want to do a thing that doesn't deliver value in the near term for our investors. So yes, we're going to need more capital down the road, but we think the 7 million that we're raising in conjunction with this transaction is going to allow us to unlock a lot of value. And we also want to get out and tell the story about this combined portfolio, 6.2 million ounces of gold in the Western United States, marching towards production with a heap leach target of 150,000 ounces a year, and the possibility of so much more with the exploration beyond. So lots to tell on the story, lots of value catalysts from that 7 million to start. And as you point out, the gold price and the environment is just improving here as we go. So I think there's a bright future. And I want to emphasize again, we're building this company because we see real need for quality development projects to fill that growing gap between the pace of global production and the pace of exploration in this rising gold price environment from good locations.
Now, Hugh, one of your peers at a similar stage of development in Chile announced a financing this week, and due to demand, they more than doubled it. They have more than doubled it in an upsize. If the money's available, people say, "Look, we really want to come in." Is that a possibility for Revival?
Yeah, we do have an arrangement with our lead agents for a 15% upsize on the 7 million raise. So you could see us go above 7 million with the raise. But we're really targeting high quality investors with this raise, and value add investors. Look, we've got a great shareholder base in Revival Gold, almost 50% institutional ownership. On the Ensign side, the company that we're acquiring, we've got more good shareholders, and our shareholders and their shareholders are participating in this raise. And the intention is to continue to build with quality investors as we go here. And so to answer your question, Paul, we do have room to go upsized a bit here, but we want to stick with quality investors. This is still an early innings of the game, and as we build the company.
Okay, thank you, Hugh. Now, let's wrap up by, if you can tell us, where do you want Revival Gold to be by the end of the year? If you have a bit of luck and everything goes your way and you complete what you set out to do.
Well, we want to make sure this story is understood. So we're going to be doing a lot of messaging for the street on this story. We think it's got a lot of take up in the U.S. Retail environment because of that domestic gold production capability and the large resource. So that's job one, is to get the message out. And that's my hope for the end of the year, is that we've got a lot more eyeballs on the story. Of course, we'd like to see our valuation up as a result of that marketing effort and getting that story out. And we've got the catalysts to do that. As we progress the PEA on the Mercur project and put out some of the interim results towards that end, I think people are going to see the de-risking, the kind of value that can be created with this project, and all of that for the benefit of our shareholders as we go here. I think we're going to see a higher gold price too. Look, this is a good trend we're on. It seems to be very strong as the gold moves from west to the much more populous east and into longer term hands. That's got to be good for the gold sector as well.
Well, it's certainly good for the sector to have some wind in its sails now. Hugh, thank you very much for joining us today.
Thank you, Paul.
And this is Paul Harris with Kitco Mining. If you like what you see, don't forget to subscribe.